Okay, Doc here from North America. Oh, yeah, okay. I am up. Good morning, good afternoon, and good evening somewhere. This is Doc. It is TGIM. It's thank goodness it's Monday, and we're ready to go again on another. I guess you could say slow, steady growth in many different ways when it comes to the equity market. They seem to be they just passed that crazy bill for almost $800 billion. It's like 793. Just spend another $1 trillion. It's amazing. I'm looking at the euro right now. I have the euro up there. I have the dollar index. No, what do I have? The S&P's on J4X. Let's put the euro on there instead of going to the dollar index. I'm just looking at it, trying to figure out how the dollar is acting from this whole thing. And basically, it's a yawn. You know, it's barely. Actually, J4X has it in a red, no less. Still, we have no dot here, and we're just up just a little bit. You know, trading at 1.019. It's not even at 101. You know, well, it's heading for 02, I guess you could say. But the end result is that look at it. The dollar has fallen against the euro. Now it's plateauing right there, as you can see on Chicago Quant. We are playing with a weekly buy as we speak, which is really nice. The thing is rocketed from under the manifold all the way into the plus territory. Let's put a little circly thing in there for this week on that. That's fascinating to see that go up. We thought that we'd see more strength in it this week, but didn't think it was going to launch itself right through it, which is really nice. And you can see that right there. There it is on the Chicago Quant with a little circle there. And then over here on J4. Oh, you know what I don't have? I just realized. I didn't. Let me turn on the chat line. I just realized I went to my mind automatically looked over at the chat line on the computer that has the chat line, and it's not there. So let's turn that on. There we go. So we'll crank that up to see if anybody said hi so far. Yeah, that's a. You know, the dollar is still holding up pretty well. It has to make you wonder. You know, it's like a perfect laboratory in many ways, and a perfect, like as if we're really watching a solid experiment in a laboratory. And right now, you know, you see the dollar. It's not, you know, getting crushed. They go spend another $1 trillion out of nowhere. You know, it's just in other words, you would think that if these trillions of dollars that they print in American dollars had some effect, you would think that right now we'd be trading at like 106 or something like that, up at the top end of the Fibonacci range up in here, you know. Be trading all the way up to, where's that? That's 108. You would think that they would take this thing, you know, the world's coming to an end. They're printing more dollars. You know, blah, 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 as everybody talks about. Oh, my God. I heard somebody this morning on one of the financial channels say the Chinese barely have $1 trillion in bonds. It's the lowest they've been in years. Oh my goodness, maybe that means they're selling. It's like, hello, they still have $1 trillion in bonds. And Japan has $1 trillion in bonds, and Europe pretty much has $1 trillion when you include England in bonds. So they're not exactly running away. It'd be one thing if they had, like, you know, first you have $1 trillion in U.S. bonds, and now you have, say, 800 billion, and 200 billion disappeared, 20%. Then I'd be paying attention to it. But the Chinese have been sitting in the $1 trillion area for a long while now. You know, 1 trillion this and 1 trillion that number. You know, like 1 trillion, you know, 50 billion and 1 trillion. They may have gotten as high as 1 trillion 100 billion at one point, but nothing major. Right now, the Japanese are the bigger investor. I think they have something like 1 trillion, you know, 90 billion in U.S. bonds. They're the second. They're the largest holder of U.S. bonds. The Japanese. The Chinese are right there with the rest of the gang. Europe and England and, you know, Japan and the rest of the world. I mean, pretty much the biggest holder of U.S. Treasury bonds is American citizens, we control almost 50% of all the bonds. I'm not talking about the Federal Reserve. I'm talking about actual, Americans and funds and so forth and so on. So in other words, that's when you have to start worrying, is when the Americans start selling U.S. Treasury bonds out of their portfolios. But right now, we don't see that. So they passed that strange, crazy, let's spend another $1 trillion law, and the dollar, you can see it there, it's trying to lift up a little bit. I'm sorry, no, the euro is trying to lift up a little bit, but it's not even challenging any of these highs of the last 6-7 days or 10 days. So I guess in many ways, Robin and I were talking about it this morning, people have a very apocalyptic attitude about it all, but we really don't see it jumping out. I mean, for every buyer, there's a seller, and that's just the way the world goes, and there's no stopping that, and it's always going to be that way. If you want to be a seller, then someone has to buy it from you. And why people who put out these apocalyptic attitudes about the financial markets don't seem to realize that. And cryptos and the rest of them, I don't really believe crypto will deviate from the basic market parameters. We see it. Bitcoin follows the stock indices, and it's a great tool to be able to move capital with. But it doesn't seem to have found it. It didn't go up during inflation. It went down during inflation, like gold did. So it's it's a whole different concept that people don't get a grasp of, and that is buy low, sell high, or sell it high and buy it back cheaper, short. That type of thing. And so that's really what it comes down to. All right, let's check out the chat line and see what's going on here. Come on, chat line, open up. Open link. There's that. Okay, there's Dukascopy. Let's get that chat line up. What's up with this? It's not opening. Oh, here it goes. Now it's opening. Here we go. There we go. And so let's see if there's any questions this morning. Anybody saying hello or hi or so forth and so on. There we go. I got Jordan there. Hey, Jordan. There's Metho 2000. There's Robin. Yeah, let's see. Okay, yeah. So Metho says Bitcoin is a Wall Street asset. Yep, exactly. And unfortunately, we were all hoping it would be independent the way people want it to be independent. In other words, when inflation exploded, we would have thought it would go up. It could do better than gold. What happened? It lost 60% of its value or 70% of its value, Bitcoin. Gold, with inflation exploding, lost 15-20% of its value. Actually, Bitcoin has become more of a liability than the metals complex. Now, I think we saw silver go from the 26, 27 area down to the 18 area. That silver, in many ways, is matching Bitcoin, unfortunately. Both of them are matching it. We're not happy about that. We really wanted an alternative asset that would supersede paying attention to Wall Street and the Federal Reserve. That's what Bitcoin's all about. That's what the blockchain technology is all about. That's what we were all hoping for. And so that's where we're at on that, I guess. Sad but true. All right. So perfect example this morning. I'll repeat myself just one more time. The clowns in Washington, D.C. add another $1 trillion to our spending. We're in the middle of an aggressive inflation, and the markets yawn. That's what it comes down to. They yawn. They're not even paying attention. So Dow Jones Industrial Average is like, I think it's up like 100. Last I saw, it was up 150 some odd points. Let's just put it up there on the short term intraday, so you can see the differences between S&P 500, the Tech 100, and well, we have Tesla in there too. There it is right there. You can see the Dow Jones Industrial Average up 156 points. We'll make it the whole screen there. There it is. So find a way to spend another $1 trillion and buy stocks. Oy, oy, oy. what a crazy world. We did a webinar, I guess it was last week, where we said the fundamentals are not fundamental anymore. They don't work. You know, they have nothing to do with the market. Fundamentals don't have anything to do with the market anymore. That's what the problem is. All right. From there, at least not the way we interpret it. Let's put it that way. I understand how fundamentals do have effects, but not totally the way it should be. All right. From there, we go over to, let's take a look at the dollar index now. There's the dollar index. It had closed in a buy last 5 days. Today, it is flirting with a daily sell. It's still in a weekly buy, as you can see right there. There it is right there. You see that? We made it very clear. So it came in a daily buy, and it's in a weekly buy, and it's starting to top out in here. So if you're long it from following Doc's work, take your profits. That's for sure. I wouldn't get shorted. There's no reason in the world why you'd want to get shorted. Just saying, just take a profit. Do good money management. Then over on J4X, let's take a look at it there. It's around here somewhere. There it is, right there. It's lifting up still, showing some life, but you can see it's down for the day. But Hinky is still green. You can see there the stochastic is curving, like Chicago is. Excuse me. Excuse me. Sorry about that. A couple sneezes there. It's curving. Let's see if we can shrink this down again so you can see it better. So you can see it's curving down. Just as on Chicago, at J4X, you can see J4X is turning sideways. We'll see if it challenges it. And let's take a look at it on a weekly basis, too, over on J4X. Right there. You can see it's green today. See right there. We are green. Last couple of weeks, it's been in the red, and it's been in a sell. But over on Chicago Quant, we've been in that buy now. Let's shrink it down just a little bit to match up. Where are you? It's around here somewhere. Where's that little button? There it is. So you can see it there. It's been in that buy from back in there. And it's just, maybe this is a little, it was a nice little buy there. Didn't go too far. And it's hesitating here. It's telling us we have some volatility that's trying to kick up, just like right there. Maybe it'll do an A, B, C type of thing. We'll see. We'll watch it. We'll see. And then we can go back to the euro again. You can see the euro is showing some real life there. See it right there. Let's put it into J4X. Right there. There's the weekly. And it's been in a sell just like ours for a while. It did jump into the green, and the green line was through. So last week it tried to put you in the buy. And this week it's still there. It's above the green line is above the dash line, but we're in a red hinky at the moment. And so, whereas over here on Chicago Quant, it's showing some real life. And last week it didn't. Whereas and you can see here, this is pretty clear. It's been bouncing around, trying to climb now for a couple of weeks. What is that? That's 1, 2, 3, 4, 5. 1, 2, 3, 4, 5. 1, 2, 3, 4, 5. So that's 3 weeks. This is going on a 4th week. So it's, and last week it had closed in a buy and felt the pressure from it too. So it went into the buy with that daily buy, it looks like on J4X. And then now it's been just sideways through it all. All right. From there, we'll slip over to the cable. See what the cable is up to. And there's the cable. It is in a daily sell. And it still is, but it's up for the day and flirting. And it is flirting with a weekly buy. So we're seeing some real action come in here. Weekly buys are being, let's say, activated. We'll see if they hold for the week and stay above. And maybe they will lift. And maybe this is the beginning of a little selling in the dollar. I myself would have thought that after passing another $1 trillion, they would be buying dollars. And I guess if you do, here's a good example of why they're not, and the fundamentals are upside down. And that is, they just decide we're in 10% inflation basically. The Congress has just decided to spend another $1 trillion to increase that inflation. And let's just take a look at the 30-year bond and the 10-year bond. There is the 10-year bond. It's trying to climb into a buy. And the 10-year is doing the same exact thing. It's trying to climb into a buy, I believe. No, it's not doing that yet. So let me just, I can see some data looking a little odd there, but that is amazing. You know, let's go back to the 30-year. You would have thought that inflation, sell bonds, like what the news media is trying to tell us the Chinese are doing, which to me, I don't see it. All I see is still $1 trillion in their account of bonds. So just because they're not 1 trillion, 80 billion, doesn't make me feel like they're walking away from the money. What's it? Corona? What's it? The Metho says 2,000. You mean spending that money? I don't know about that, but it's going to go to chips and government intimidation. That's pretty much, they're going to hire 87,000 new IRS agents to go attack people for paying taxes. So I don't know about Corona. I don't think there's any Corona money in there at all. I didn't see any Corona money in there. There might be. Out of almost $800 billion, it must be 10 or 15 billion being thrown at Corona somewhere, just for the sake of it. But it's not. It's a bill for, I think, 300 and some odd billion go to chip companies. Another crazy 80 some odd billion go to the IRS. Or you sneeze. Yeah, really, isn't that the truth? Crazy, crazy stuff. All right, from there we'll drift over to, let's see, not there, there we go. Let's go take a look at the, see, we did the euro, we did the cable, let's do the Swiss franc, see what the Swiss franc's up to, right there. There it is. And, Swiss franc is rallying, it's trying to move down against the dollar. That's bullish for it. It's trying to go into the daily sell. We've been in that weekly sell since here. We went into a daily buy back here, so it's just kept you from being short through all this. And now you're getting ready to go short again. Check it out on J4X. There we go. There's the weekly. And it's in that sell for 4 weeks, like Chicago Quant. Chicago Quant's 5 weeks into it now. And let's see, where's next? Let's go to daily. There's the daily. It's been in a buy for 4 days, just like us. And now we're sliding into a sell. And oh, look at that! It's a green and a red now on there, so it's showing some activity coming. Some volatility that's going to show up. All right. That sneeze. My sneeze was Corona. I got it. I just got it this second. Oh, I like that. That's a good one, Metho. I agree. I do that to people too. I go like that when they sneeze. I go Corona. Very good. I was so captivated by the extra almost $1 trillion they're going to spend that my mind was off of the basics. You are so right. Ah, my God, that's so good. Took a while for Doc to get that. You notice that? What a simpleton I am sometimes. Oh my God. Let's see. Was looking at Swiss chart over the weekend. Would you like to look at it? Most definitely. That's what we have there now. So, yeah, it's been in that weekly sell for 4 weeks. This is the 5th week now. You can see over on J4X, we just saw it was 3 weeks going on to 4. The daily is flirting to go back into a sell. I myself am wondering if it's going to go back to the range. Let me just look at it this way. There's the old range right here. Let's see. Let's make that brighter. So there's the old range going back to basically almost to 2000. It was the spring of 2001. Okay. So it was in a range, and it stayed in that range for a long while, and then fell down it, and then fell, dropped below it. Let's do that on J4X. There we are. So we were in a solid range going back to 2000. It fell out of it during the crazy swing of Corona and found itself back inside that range. You can see that right there. And we've been following that range for a long time. You can see the white lines there. Then we Fibonacci'd it here. Right? You can see that. Matter of fact, if we go like this, there we are. So we were looking at that range for a long time, for almost 2.5 years, and it was adhering to it pretty well. And then the inflation explosion occurred, and you got this jumping out of its range dramatically. Okay, and now it seems in many ways it's developing a whole new inflation range, and that's what this is all about right there. Look how uniform that is too. And again, who else could make these things look so uniform but central banks? Again, the Federal Reserve and the central banks in Europe and everywhere else are running these markets now. These are not funds running them and so forth. These are the central banks running the markets. Picking and choosing winners and losers. A little sip of my water there. I'm wondering if it's going to find a way to drift down back into the old range. Robin and I were talking about this morning. In many ways, I think the markets are anticipating that all this calamity that's been created for the last year and a half, under Mr. Biden, pretty much is maybe going to go away. That's what I think the markets are anticipating that. That's what it has, that look to it. The whole markets, I was saying it to last week, the markets are constantly anticipating the election. They're constantly talking about it. It's, first it was 6 months away, then 5 months, now 4 months. Now we're going into where we're at. We're August 8th today, right? So the election is November 8th. So we are now, August to September, September to October, October to November. Today represents 3 months away to the election, and that's all they talk about. And how the markets seem to be anticipating that all these things that are very negative on a fundamental way, but for some reason they don't seem to pay attention to them whatsoever. They seem to ignore them. That's the weird part about it all. And there's like this upwardly biased. Let's just do this. When you check out the daily chart in the S&P 500 right there, you see that there's more of an upwardly bias to it over the last few months. Going into from June and May. Usually it's sell in May and go away. They did that. Instead, they started doing that in November of last year. So you see here the highs in November of last year, and they sold it down. It lifted up for a month, and then sold it back down again. It was like this big ABC, and or the 1, 2. This was the 3, and this is the 4 right there, and this is the 5. So it's a 5-wave down. And then they seem to have dug their heels in. And I guess as the polls and everything showed it, the Democrats are going to get wiped out dramatically, and government is going to go back to some level of responsibility again. The markets seem to be acting really well. Now, the media is still claiming that they're not sure if the Democrats are going to lose anything. Which sounds crazy, because, the polls are so bad. Mr. Biden is polling under 20% with Latinos. When you break them down in sections, with white Americans, it's like 65% against him, 35% for him. African American community, it's at one of its all-time high, not all-time highs, but it's at, for Biden it is. 25% of the African community is not going to vote for him, which is a big. 75% is still going to vote for him, but that's urban socialism, so that's normal. there's a thing we call it in America. We don't really talk about it much here. We call it urban socialism. The big cities really do practice a very aggressive form of socialism. And so they refer to it as urban socialism. They've been talking about this for decades. You know, all the way back to Jack Kemp and Ronald Reagan, they talked about urban socialism. Matter of fact, Mr. Reagan won 44% of the African American vote when he ran, which was pretty impressive. Mr. Trump, I believe, won in the 30s, and which is big numbers. That's why there's a great confusion about how somehow or another he lost the election. But end result is that, and in the 7 states that he lost the elections in, have overturned all those things that they've done. Anyway, I'm not going to get into that. But in the end result is it's not going to happen again. Let's put it that way. So the markets are picking that up, that the elections have been repaired from the damage that was done last time. And you can see it in the small elections going on now. Republicans just keep on winning everywhere. Last one was a congressional race about a month ago down in South Texas, where a Republican had not held a seat since 1871. 1871, not 1971. 1871, and that Republican won the seat by like 15%. So the media is telling you that don't pay attention. Matter of fact, they're not even reporting that win to begin with, so it doesn't matter. As far as they're concerned, it didn't happen. So the markets, though, seem to be telling us that something's going on here. They're telling us that fundamentals mean nothing at the moment because they see a major change coming. And so there's the S&P 500, and you can see the way it's been acting since the polls have been showing that there's going to be a dramatic change in the government. Now the big question is how much. That's it. It's going to change. Now the question is how much is it going to change, and that's what we're all watching for now. When going back to the Swiss, let's do that. Right? No, that's not it. There it is, right there. There's the Swiss. So maybe this thing's going to try to get back down. It's not doing it yet. You can see it keeps on making lower lows here. So maybe, and it's making lower highs. This high was lower than this high. This high is lower than that high. And now it's doing a curve up, and this is going to be a higher low and a lower low. Maybe we're going to come back down to the old range. Maybe. We'll see. But one thing's for sure, we're 50% of the way there, if not more, to get back to the old range. We're already there. So that kind of explains the reason why the fundamentals don't seem to be functioning right whatsoever at this point. Because markets are looking at them, and they're lifting. They're saying that basically things are going to get better financially. Now the actions of the government are saying things are going to get worse, and the markets are not paying attention to that. So, and you can see here, look at that big move. That's when the government started to enact, the inflation explosion of all the other stuff going on, the crazy inflation, just spending and not raising rates. Now the invasion, which is kind of interesting, when did the invasion happen? In March, right there in Ukraine, and it took a while for it to get going, but once that inflation explosion started to take off, and you can see oil. Let's just take a look at oil. I mean, oil is back to before the invasion, the Russian invasion. So there it is right there. So when you go back to March, there's December. Oil was rallying because of Mr. Biden's policies. Okay, the moment he became president, oil took off. It exploded up. And so the invasion, which is right here, that's the invasion right there. It jumped up and started making higher lows and kept on going. And now it's breaking down since the polls are showing that Mr. Biden's party is going to get wiped out. That's at least my way I understand it. because I don't understand how you can keep on enhancing inflation and the markets don't pay attention to it anymore. So, just my opinion at this point. All we do is follow the math in the end result, and the math is telling us that the markets want to go up in value. And here is the S&P 500 again, right there. It's going up in value since that polling and inflation stuff all started right there. So. All right, I hope I answered your question on the Swiss. I think the Swiss is trying to get back to the old range. I think a lot of these things are probably doing that. But more than anything else, without a doubt, I think it's the Swiss. Let's see. I mean, we could go back to cable real quick and just look at where cable was. Cable has been in a long ride down. That's not it. Right there. Cable's been in a long ride down, just like the euro has. Matter of fact, when the markets topped out in November, the currencies seemed to have topped out. It's the same pattern. This chart here is the same pattern as the S&P 500, and this didn't mean to grab that. And right here, the S&P 500 is lifting, and this thing is lifting. So they're selling dollars, buying stocks. I guess they have to do that, right? If you buy stocks and you do it in British pounds, you've got to buy dollars, right? Let me see. You buy American stocks. That makes you long dollars. Okay? That makes sense? You buy American stocks, you're long the stock, and you're long the dollar. Now, you do it from England or Europe, and you've got to what? You've got to sell your British pounds to buy dollars, right? I guess that's what it is, right? And if you're not buying British pounds, if you're not selling British pounds, which they had been doing, and they're starting to lift British pounds, that means that they're not buying dollars. So they are long dollars not twice, just once. They're long the dollar in the equity market, but they're not long it in currency. So they're flat the currency. I think that's what that comes down to. Yeah, cheers. Cool, Jordan. And so I think what we're seeing here is that they're not doubling up on being long the dollar. They're long the equity market, which makes them long the dollar. Does that make any sense? Tell me if that sounds crazy. It sounds crazy, but no, it makes sense to me. It doesn't sound crazy. It's just explaining it sounds odd, that's all. So in other words, I could be long dollars twice if I sell my British pounds, buy American dollars, and buy the American stocks. That would make me long the dollar twice. Yeah, that would. So what they're doing is they're selling dollars to be flat the dollar, not bearish the dollar. Flat the dollar. And obviously you're still long dollars by being long the American stocks. And you're long the equity at the same time. All right, so let's jump further out. Let's go over to, where do we go from here? Let's go to the Turkish lira. Let's do that. See what the Turkish lira is up to. There's the Euro Turkish lira this morning. Whoa, what in blazes is that? Because of that, we better go look at the other one. Let's go see what the dollar Turkish lira is. Is that distortion in it? No. Okay, so that's odd. Did it really lose that for a few minutes or an hour? Anybody out there have any opinion about the Euro Turkish lira? Did anybody see that actually happen? That big dip, or is that just some type of odd mistake by the computer? Which is all think about that or look at it. You know what? Let's go over to J4X. We'll let J4X be the guide to that whole process there. There we are. Okay, let's do this. Let's get over there. And we got it up. Oh, you can't even see it because we were looking at the weekly. So let's do that. And let's go over to Euro Turkish lira. See if there's a distortion in there like that on the US. No, no distortion. I'll show you now that you can see both. Here is the Euro Turkish lira. I need to hit a refresh on that thing. Let's see if we can do this. That didn't do it. Let's try it one more time. View. There it is, reload. Still there. I'm not sure what that distortion is. Maybe I'll have to clean it up. I might have to go in and fix it. Because it's not on J4X. If it's not on J4X, more than likely it didn't happen. So it's just a bad tick out of the brokerage house here. Let's see. Can't see the screen. Exactly. Now you can. So, see that odd distortion that occurred. Yeah, I'm sure that's just the exchange at this point, but I trust Dukascopies to be, more accurate. I trust it. I do. All right. From there, where do we go from there? We go to, well, first of all, I'm not going to try to fool with it now, and it closed in a buy on Friday, so that's all right, and it wasn't a weekly buy coming in, so chances are it still is. Now let's take a look at it, dollar euro. Obviously, that's still staying strong right there. Today's high is 1796.8. And Friday's high was 1797.7, basically. So they seem to have stalled out the Turkish lira at the moment. They've kind of gone to sleep up here on right at the 18 area, which last time it was up here. Let's just show you what happened. We ran up to the 18 area, and the government came in and did some really interesting, good stuff. And then it fell apart. Somewhere along the line, the strategy of giving out free puts for people buying Turkish lira seems to have disappeared. So now, I mean, it's nowhere near as volatile as it has been, but it's still at all-time highs, which is enormous inflation. I think the last time I saw an inflation number for Turkey was 180%. Inflation. 180%. That's Zimbabwe type inflation, All right. From there, let's see. We go to where do we go from there? We go to let's go over to the Canadian. Let's do that. Let's put the Canadian up on J4X. There's a Euro Turkish pairs trade right there. There's that. It's lifting up a little bit, nothing major. Look at that, the green line is breaking down, but we're still in a green hinky. Let's go take a Canadian. I would imagine Canadian didn't look, I wasn't really paying attention to oil when we looked at it. I don't know if oil is up or down, but that'll be interesting to see. Okay, so it's breaking down here, still in a daily buy on our work right there. Was in a weekly buy last week. Yeah, it went into a weekly buy last week, and it's already going into a weekly sell. So that lasted one whole week. Now we'll see if it, stays in a weekly sell where it'll be just like an in and an out. And it's doing no problem whatsoever. I mean, it's going through the manifold. Look at that. Through the manifold, no problem. Bang. Look at that right there. Now, that's the dollar, Canadian against the dollar. So it's gaining against the dollar. So now what we'll do is we'll take a look at oil. And I would assume, because of the way that's going down, oil must be going up in value. And let's go find oil. There it is, there's September oil. Looks kind of flattish to me. If nothing else, it's even down. It's got a little green dot. It's trying to get up. The weekly is still down. It's just on the hair of its chinny chin. Let's see. What else can we say about the oil? Let's take a look at the back month. Normally we don't. We'll wait till the oil sector to get there, but let's see where it is today. There it is right there. It's trying to lift. At one point it was through, obviously, because it had a green line there. We can remove that. It's fallen back down again. You can see the high almost went after yesterday's high. So we've got that going on at the moment. Now from there, we'll jump over to the South African Rand. Right there. Dollar Rand. Put it up on J4X. Right there. So you can see it is also gaining against the dollar, not by a lot, but that would make us believe that the gold is going up in value. So let's take a look at gold. There's gold, and gold is going up today. It is going up. You can see that. And so there's a little buying going on in the gold. Let's take a look at it on J4X. See the same thing. It's showing for a couple days of strength in there, just like us. We've been in a buy for a while. And you can see here, this thing has tried to do the same exact thing. That long, what's that? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13 days back. It's like 3 weeks back. This thing has been pushing up. You can see it there on J4X. Okay, from there we drift over to, let's see, we looked at the gold, we look at the South African Rand, and we'll go to the Mexican Peso, and then we're done looking at the currencies we look at. Anybody wants to see any other pairs trade, let us know. We will go to it, just the way Jordan wanted to see dollar Swiss. We went back to that with no problem. We can go back and look at stuff a second time and a third time. I really find it always, well worth it. Always well worth it. You never know. And you can see here, Mexican Peso is playing with the downside of the range at the moment. Was trapped pretty much dead center for a while here. It's been doing that for a month and a half. And now we're still trapped in that middle of the range. When we contract this up, make it tighter, you end up seeing the top of the range right there. It hasn't visited the top of the range since March, since the war. Since the invasion. So, and not counting the inflation stuff. But notice, and we've talked about this before, we do notice one thing, and that is that the two currencies traded next door to us, to the north and the south, the Canadian and the Mexican Peso, both have not really stepped out of their ranges. Okay? I mean, they've danced a little bit around it. You can see here the Mexican Peso slid underneath it right there for a little while. And the invasion knocked it down in the Ukraine, but it didn't really have much of an effect. Whereas all the other currencies, if you notice, when you look back at the invasion, let's do that real quick. When you look at the euro back to last March, you can see they've really taken that thing apart. It was up in the 112 area, and it has traded down to par. They really beat it up bad. That's a 12% drop. And then cable, same situation. There is the cable back to March of last year. And the cable was trading in the 133 area, say, something like that, 132 area, and has traded as low as 118. So it's also had that 12-13% pairing going on. And then when we look at the Mexican Peso, let's go back to the Peso. Where's it at? Where are you, Peso? There you go. So when we go back to March there, you can see the same thing happened to it. It was at the top end of the range, and it drove it down to the bottom end of the range. But it also felt that pressure from the invasion. And then let's take a look at Canadian the same way. And that would be a low in the March. There's March. Okay, it was the top, so it was a high. Drove it down, and then it moved it back up to the top end of the range and back down and top end of the range. No doubt stepping outside of it a little bit each time, a little further out of there, a little further, about the same there, and the same thing here except for that one spike. And now it's playing at the top end of that range for a long while now. So that it had effect. The invasion had an effect on all the currencies and the metals complex, and also, oil and so forth. So how do we read that? What is it telling us? That's the bigger question, traders. It's like, what is it telling us? Well, it told us that it was a flight to safety to start off with. They ran the dollars. But they weren't that safe, because when you go and look at gold and silver, there was no flight of safety there. They ran away from it and ran to the dollar. So there's silver. When we go back to March, back in March, this product was trading at $26 and $27 an ounce, and it found a way to get to $18 an ounce. So that was no flight to safety when it came to the metals complex. They ran to the dollar as a flight to safety. Gold was trading at, I think it was 1900 and something, right? It was trading at 2000. Okay, no, the week before the invasion, it was trading at 10 days before the invasion, 12 days, it was trading at $2,000 an ounce, and next thing you know, after the invasion, it's trading at $1,840 an ounce. So obviously they did not run to the metals, and you can say we can go to the cryptos too. Unfortunately, the cryptos were the same way, I would believe. So the cryptos were trading before the invasion at the $40,000 area, right there. And after the invasion, it lost 50% of it, down into the 19s, 18s, and 19s, right in here. So, unfortunately, the flight to safety thing doesn't always match up to the fundamental concepts. In other words, they run to dollars and bonds. Again, we've talked about this too last week, and that was money likes to go where it can make money. So they run to the dollar because they're making money. The Fed is paying people to, something unique. They're paying interest. Something that was been done for thousands of years. Somehow or another, most of the other countries in the world have run away from it. They stopped paying interest. They didn't go bankrupt. They just started floating bonds so that people could just park their money in their assets, but no one was paying interest to it. And so now they're all paying interest on some level because of the inflation factor. And obviously the most popular is the U.S. dollar still, which is odd, but it is. So I don't know if what that tells us more than anything else is that they just run to the dollar. When in doubt, run to the dollar. Not gold, not Bitcoin, not silver. They run to the dollar. And for an American, that's an irritating thing. I know you think it's great. The Chinese think it's wonderful that they are, we're the world reserve currency, but it's a blessing and a curse at the same time. It messes up with our stats. We talked about this last week, M1 and M2, which were fundamentals that we used to follow. The money supply on one, and that was like checking and savings. That was savings accounts and checking accounts separately. Then we had to move an M2 was savings accounts and short, bonds and so forth, and savings accounts. In other words, you keep on adding other tools, money market funds and equities. I think M6 probably follows like stocks all the way down to savings accounts, and so it messes with our numbers. So it's hard to understand fundamentally what our value is. Just like same thing with China, it's hard to understand what the value is when they have a fixed currency and they won't let it float. It makes it very tough. I bet the Chinese would be not the Chinese government, but I bet the population would be very happy to know what their currency really is valued at. Is it 6 or 7, or is it 16 or 17, or is it 26 or 27? I think they would like to know what the asset value really is. Unfortunately, we're all stuck in that boat. We're all guessing what our asset values are anymore when it comes to the central banks and fundamentals. People can't even follow fundamentals anymore. All right. From there, we jump over to, let's take a look at the oil market. We're done the currencies. And there's crude oil. You can see it's at the end of the range, hanging in that low 90s area, or 88, 87 area, that type of thing. Right now it's trading at 88.08. And you can see it's trying to dance with the weekly. The daily, right there. And we were through it at one point on the back month. Let's take a look at Brent this morning over on J4X. Right there. Same situation. Lots of red at the low end of the range since the war started. And, maybe I kind of think they're going to basically hang out in this area. I think the low 90s, the high 80s for oil, and the States for Brent, the same situation, the low 90s. And I think the high end of the range is in the teens and the 20s. And we're at that low end of the range at the moment. Did I miss something? Let me think. Storm, hey Storm, how you doing? Late, but here they are. Hey, there. Did I miss anything? Well, you're probably in. This was pretty good. I wasn't too crazy for a change. I think I was kind of sane this morning. Maybe because I'm tired from the weekend. So I would say you can watch the replay. I guess better than anything else is we've got about 6 minutes to go, or 5 minutes. Is there anything you would like to see? We did look at, what we were looking at is how the stocks have added, let's try it again in English. How the stocks acted, not added, acted, and how the currencies acted from the invasion. And why the two North American currencies of the Peso and the Canadian, why they are much more passive. They have been influenced percentage-wise a lot like the other currencies in the world, but nowhere near. So the question was it a flight to safety? That was the last thing we were talking about. And we've been talking about the lack of fundamentals being fundamental. We looked at gold, how gold fell apart from 2000 to 1700 during the invasion and takeover of Ukraine. So what's my thought on the Dow? It's up at the moment. And, again, the politicians, what started this whole conversation is the politicians added another almost $1 trillion of debt yesterday. So it hasn't been passed yet, but it's going to be passed by this morning in the House. So they voted to increase by another 1,000. And we'll see. But as far as we can tell, the markets are interpreting that it's all going to go away. In other words, no matter what they pass, it's not going to be part of the economic structure because the polls, that's what we were talking about, is how the polls are showing that the government is going to change pretty dramatically over the next 3 months. And it seems to keep us all stalled out. So the fundamentals don't seem to function like fundamentals because the markets are looking beyond the fundamentals. They're looking at the election and how the fundamentals are going to change the moment they're already trading the markets like the fundamentals are looking at not what the government is doing but what the new government is going to do. That's what it comes down to. I'll say that again because that's probably the best way to describe our whole webinar this morning, and that is that markets overall, currencies, metals, so forth, are looking at how the government is going to be, not the way the government is right now. So it's discounting today's government and saying you're not going to be there long. Yeah. Hey, Storm, I'm glad that you pick up on it. That's cool. Sometimes I wonder if I pick up on it. Sometimes I wonder. That's why I have to say, am I really here or am I in a nursing home right now and this is a fantasy that I'm doing a webinar? It's sometimes I wonder. If I wasn't trading, I would know that it's a fantasy. But in the end result is that's where we're at. You good. I'm glad I give you a laugh. I'm happy to make people laugh. I laugh at myself all the time. So yeah, that's where we're at the moment. And so the whole webinar has been, wow, how can we label this so that encompasses it? That's the title of today's webinar should be that too. Not what the government does now, but what it's going to do. It's too long a title. Not today, but 3 months from now or something like that. That's pretty much what the title of this webinar should be. Label it, Storm was late. Actually, I would say, in my head, the storm is early. So, in the sense of that the storm that's coming is coming, and it's in the market right now. And so, you being late, you got here, you stopped in and said hi. Hey, that's pretty cool. You could have been agnostic and been lazy and said, oh, to hell with that, I'll just tune it in tomorrow. But you stopped in and said hi, that's nice. That's a winner chicken dinner as far as I'm concerned. Late summer storm, yes. Oh, I think you've done it, Metho. That's a great way to do it. You're right. Maybe late, late financial storm. How's that? Or the financial storm is coming. How's that? That's even better. I like that. Storm, you're going to be in there. You done it. See that? You showed up for 6-7 minutes and you had an influence. That's what the cyber trading pit is all about here. It's not really a webinar. We're just a cyber trading pit of traders talking. That's what it really comes down to. Kicking ideas around. You never know when you're going to come up with a good one. I mean, me, you, or anybody else, we have no idea when we're going to come up with a good one. We follow the math. That's pretty much the name of the game, All right, this is Doc from North America, and we're going to label it this, too. The financial storm is coming. How's that? Or the late financial storm is coming. Something like that. It's going to be financial, it's going to be storm, and it's going to be coming. That's for sure. All right, this is Doc from North America. We will talk to you all tomorrow. Same time, same channel. So, happy trails to you until we meet again. Happy trails to you, to all our trading friends. Later, traders. Be safe, be smart.